Hey YouTube, welcome to another video. This video is all about Shift.com, which is bringing the e-commerce in car sales. Yesterday it was the EPS day, so I decided to analyze this company. It's an iBuying business just like Vroom and Carvana, but comparatively cheaper stock. So let's find out if it has the potential to take off or not. Before going deep down, make sure to subscribe to this channel to support me analyzing more stocks and hit the bell icon to get latest updates first. Also don't hesitate to comment down the name of stocks you want me to analyze. Shift covers the whole car selling process. They buy, sell and provide financial services for used cars. So without any further waste of time, let's analyze the opportunities in this company. The industry is 840 billion and 15 out of 30 million cars are sold directly. On top of that, the millennials are growing fast. They are mostly interested in buying over the internet. So there is a big potential of opportunities in my opinion. So let's talk about the strengths. After my search, company strengths includes financial services. It means the customer can apply for the lease directly on the website. Good customer services as net promoter score is 70 and also offering warranties. So technically they are offering warranty for 150 points they inspect and provides warranty up to 200 miles against those points. They are also selling EV cars, and it's important because the industry is shifting from combustion cars to EV sectors, so company can bear a huge loss due to the depreciation of price. But on the average, Shift is selling a car in 55 days, which means they had 2300 cars in their inventory as of 31st of December, and in 2020 they sold more than 13,000 cars, which means despite pandemic they sold 1,000 cars in a month on average. If they can sell 1,000 cars in a month, their current inventory could rotate in approximately 2 months. Actually, this is important as high turnover will make this company away from such losses due to the technology shift. Although the average monthly users are less than Vroom, but the company has revised its marketing strategy, so I believe it will increase in next quarter. Okay, the next is about weaknesses. Total 6 regional hubs. The number has increased from 5 since September, but there is yet a large space to fill, which means while the company would be targeting more audience, its effect would reflect in cash flow, and focuses on the large segment, basically 6 to 10 years old cars. Although it's an opportunity, but the cost of opportunity can be drastic due to the challenges in technology and new models. These old vehicles will likely to bear a price cut, resulting devaluation of inventory and can affect the balance sheet and cash flow. Threats to this company includes competitors like Carvana, which can sell its whole inventory in even less time than Shift, but if we compare, it covers more than 250 markets. Well, it itself a threat, but Shift's inventory's turnover is also slower than Carvana, and secondly, Vroom has also sold 34,000 units in last year. On top of that, the dealer network also owns a handsome amount of market and trust, and maybe someday Carvana guys file copyright infringements against this company. Let's move to the other picture of this company and talk about financials. The revenue is increasing. It's 195. It was 166 million in 2019, so it's increasing almost 20% year over year, which is not that bad. Earnings are it was decreasing for last 3 years. So in 2020 it was increased from negative 80 million to negative 59 million, so it's a positive news. And cost of revenue is 183 million versus 67 million in 2019, which means they are burning more cash right now. And gross profit is positive 12 million. They made it positive in 2020 versus in 2019 it was negative 1.7 million, which means they have started making profit now. Operating cash flow has decreased from negative 28 to negative 85 million, even if the company's net income has increased over the years from negative 80 million to negative 59 million. The operating cash flow is decreased because of the increase in inventory. So I don't think it's a red flag for now because they are increasing their inventory, and even if they are burning cash and operating cash is decreasing, they still have 233 million of cash, and total assets are 6 times higher than the liabilities. Even most liquid assets are 5 times higher than the current liabilities. Absolute liquidity is 4.99, so the company is not in the threat of being bankrupt anytime soon. Their operating expenses are 88 million and the gross profit is 12 million, which means that the company is having operational losses. 31% shares are held by institutions, which means it's good opportunity to invest in before institutions start acquiring it. And the last insider activity took place on 31st of December. CEO purchased 1.21 million shares worth of $10.04 million. So if Shift focuses on operating expenses, this company would go above and beyond. Talking about management, CEO George Arison is Georgian American with a bachelor degree in political science, one of the founder of Taxi Magic, but the idea got failed and he says he learned a lot from this failure to invent Uber. Following the Taxi Magic, he joined Google where he worked on Helpouts and Fiverr. Toby Russell is also Arison's friend and he was also co-founder of Taxi Magic and holds a doctorate degree in international relations. He was vice president at Capital One where he led the bank's technology transformation to mobile, and so far I haven't found any scandal of management. I'm down with the company, although it's speculation. In my opinion, I would buy this stock in less than $10 despite its weaknesses and threats. That's all friends. Don't forget to subscribe to encourage me to make more videos, and comment down if you like this video and let me know which stock you want to see next on this channel. See you in the next video.